Government borrowing plays a very important role in financing fiscal deficits of any government. Likewise, the Finance Ministry, the Ministry of Finance, has recently released its second half plan for the financial year 2026 as to how fiscal deficit has to be maintained, or also a plan ensuring how government borrowing should or will happen for the financial year 2026, the second half of financial year 2026. The government has talked about increasing the borrowing that it does through issuing bonds, mostly the government bonds, or most specifically we are talking about the green bonds. So this particular video is about how government budgeting helps government to raise fund, especially to cater to the financial or let's say the fiscal deficit condition of a country. And let's also try and understand what the government bonds are, the different types of bonds, and also the problems or the challenges associated with these government bonds. And also we will talk about the ways how we can tackle these problems, and in the end we will try and solve one prelims question. So let's begin the video. So as we discussed, the government is planning to raise 6.77 trillion rupees through dated securities between October 2025 to the March 2026, and this includes 10,000 crore rupees via the sovereign green bonds, which is the part of the broader climate focused borrowing target of 25,342 crore for financial year 2026. And if you wonder what these sovereign green bonds are, so basically they are a particular type of government bonds which act like bonds, but the utilization of this particular bond is most likely to go for some renewable projects, right, or those projects which tries to address the issues concerning to the climate, right, maybe in terms of increasing the renewable energy utilization, or the projects which can drastically reduce the climate the climate associated problems, right? So most of the things which are, or the funds which are solely used by raising a particular type of bond to address the climatic conditions or anything and everything related to the climate focused borrowing is done through the sovereign green bonds, and the particular target is to include rupees 10,000 crore, right, via the sovereign green bonds. And this borrowing will be spread across 22 weekly auctions covering a range of maturities from 3-year to 50-year tenors, right? So of course, people who do not know what bond is, all of these will obviously look like Greek and Latin, right? So we will just read this, and then in general we'll try and understand what government bonds are, so that all of these things are, or let's say will be very easy to understand. So coming back, the entire bonds that the government is trying to issue has been spread across various tenors starting from 3 years to 50-year to ensure that balanced yield curve is ensured for the one who is investing. And on the long side, the government also announced the treasury bills, or also famously called as the T-bill, for the calendar year, targeting 2.47 trillion rupees through short-term securities. So this is the overall planning of the government, especially the Ministry of Finance, for the next half or the second half of the financial year 2026 from October 25 to 2026. So now let's understand what bonds or green debt basically is. So in general, if we have to understand bonds, it is a part of the debt security. So now what is debt? Basically, if an investor has to invest, he has three options. One is to invest in equity, next in gold, and the third most preferred option is the debt securities. So of course, any investor, when he plans to invest, or most of the portfolios which are maintained by the investors, usually the weightage of their portfolio will be mostly on the equity, concerning the high returns that it gives. And since it gives high returns, the volatility or the risk associated with this particular equity section of the portfolio is also very high, right? And then we have gold, and then the debt securities. So this is that particular instrument which basically has your government securities, or let's say your T-bills, right? So these are those which definitely the return is assured, right? The return is definitely assured, but the return is also not too very high. But on the other hand, another advantage is it is not as volatile as your equity segment, but also we can say it is more secured in nature, because who is the backing? The backing is given by the government itself, right? So now coming back to the bonds, there are various different bonds. One is the famous government securities, or also called as the G-Secs. Then we have T-bills, and then we have SDELs, which is the state development loans. Talking about the G-Secs, it is the one that we will discuss. Basically, it is issued by the central government, or I can say that it is issued by the RBI on behalf of the central government. And this usually, people can invest, or let's say this is issued starting from 5,000 to, it starts and it goes on. And talking about the T-bill, so basically this is another sort of bond which is used, which is issued by the government, and usually this is called as, or this is considered as a short-term security. Why? Because the tenure, or let's say the maturity year does not go beyond 1 year, right? And usually they get issued in 3 different days, like for example the maturity, right? One is 91, 182, and then we have 364. These are the various dates or various maturities on which the treasury bill gets issued. And another important thing to keep in mind, that usually treasury bills, they are being issued, or they are generally rolled out usually with a discounted price, right? So the interest that one earns by investing in treasury bill is generally by buying that or investing or getting that treasury bill for a discounted price. For example, if the entire tenure, the maturity period of a particular treasury bill is for 1 year, and the face value of that T-bill, let's say, is 100 rupees, usually this gets sold, or this gets auctioned with a discounted price. Let's say it is 98. So if someone wants to invest or buy in treasury bill of 1 year maturity, if the face value of the treasury bill is 100 rupees, then eventually the person will get it for 98 rupees. So on the day of maturity, when the government has to give it back, or let's say when he has to submit the table, he'll get rupees 100, which is the 2 rupees, which is the profit or the yield earned by the person. And talking about the state development loans, this is another specific type of bond which is usually issued by the state governments, mostly utilized, or the fund which mostly is generated or raised through the state development loans usually goes to the development of some of the important infrastructure concerning with that particular state. So this is the basic with respect to the different types of bonds. Now coming back to the main aspect, what are bonds? So government bonds or government securities, G-Secs. Basically, they are the debt instruments issued by the government to borrow money from the market. They pay interest at fixed intervals, usually in 2 intervals, like once in 6 months, right? And they return the principal on maturity. Let's say the maturity is after 5 years, right? Until 5 years, once in a year or probably twice in a year, they keep getting the interest. And once the maturity is completed, the principal is also returned. And then treasury bill, which is a short-term government debt, which we discussed, is usually up to 1 year and is issued at a discount, as we discussed, and is redeemed at face value without regular interest payments. So this is also important. No interest payment happens, but the time when we invest or when we buy a T-bill, we buy it at a discounted price. Next is the green bonds. It is a type of sovereign bond, as we discussed, but proceeds of which are earmarked for environmentally sustainable projects, like mostly investing in, or let's say developing the areas or manufacturing, or let's say any particular aspect concerning the renewable energy, like your solar energy, wind energy plants, right? And then investing in energy efficiency institutions or climate adaptation measures. So this much is sufficient. Of course, SDL is not mentioned here, but this is also one of the type of government bonds. Moving forward, what is the need? So now, why does the government needs to raise the fund, or let's say borrow money through the issuance of the government bonds or G6? Right? Because one of the major important reason as to why the government raises the money or borrows the money with the help of G6 is because they are non-inflationary in nature. So this is one of the important aspect which you have to keep in mind, because to ensure fiscal management, right, the finance or to finance India's fiscal deficit, it is one of the non-inflationary measure, right, and the most predictable manner. Why? Because we are not trying to issue any new currency to the market, which obviously would lead in inflation. Now, on the other hand, what we are trying to do, the money that is already present in the market, right, the government is trying to take it out, or it is trying to absorb by issuing the government securities. And if obviously the interest rates are very attractive, people will definitely try to, or people, I say, when I say people, it means investors, right? It could be investors from any part, because who can claim? Anyone, can invest in the government securities. So when I say people, it is usually the investors. So if the returns, or let's say the interest rate concerning to a particular government security is very high, obviously the investors will try to buy that government security, and in a way no new money is actually created, right? So hence it is one of the important non-inflationary method in order to raise government funds, and it is also most predictable while ensuring liquidity in the bond market. And also in terms of investor confidence, a transparent borrowing calendar, right? Now the government has announced a transparent borrowing calendar, which now allows institutional and retail investors to plan accordingly, right? So that they can maintain market stability, so that at a one particular point of time, the government securities are being issued without having a proper calendar. So now obviously people will be in a confusion or a dilemma whether to buy it or not, whether to subscribe for it or not, right? So now you have the entire calendar of, let's say, half year, and now you know all the different tenors or let's say various different instruments of the government securities that are being issued in various forms. Like for example, we talked about the government securities, and there are green bonds, right? And the government is also planning to raise money by the issuing of T-bills, and also in various tenors, right? Starting from 5 years, 7 years, all the way to 40 years. So now it gives flexibility to the investors, right? So that is also one of the important. It improves, or it instills the investor confidence. And third most important thing as to why this kind of borrowing is required is to enhance climate commitments, to stick on to the climate commitments, especially India's plan to become the net zero emitting country by 2070, right? So it's a huge, humongous idea of India, and in order to achieve that, it has to have certain funds being channelized to improve the infrastructure or any particular aspect to help India achieve its net zero emissions by 2070, right? So hence green bonds play as one of the important catalysts to help mobilize dedicated capital for climate friendly projects aligning with India's energy transition goals. And moving on, still we have to definitely talk about all the challenges as well, right? Because it is not so easy that the government is announcing the G6 that everybody are pretty much aware that now they started subscribing. One of the biggest challenges, the muted investor appetite, means the demand for green bonds, right? Although the demand for government securities are there, but still the demand for green bonds in India has been lower than expected, which obviously raises concern about meeting the required 25,342 odd crore rupees by 2016, or let's say 2026, to finance the climate targets that India has, right? Because most of the bonds that the investors are invested is mostly the government securities, and even if you see, most of the government securities in India are currently with the banks and not with the institutions or not with the individual investors, right? So that is one of the biggest challenge, that even though people wants to invest, the demand for the green bonds is not that attractive as compared to a GSEC. So hence it is one of the huge problem. Now talking about another challenge is the problem of the high fiscal deficit pressure, because now the government already is in a deficit, right? Now what is a fiscal deficit condition? When the expenditure of the government is higher than the income that it is generating, right? So now that situation, we call that the government is in deficit, right? There's a fiscal deficit condition. So essentially, what is the government right now doing in order to fix that deficit, right? Because government is spending more than what it is actually earning. So now for that, to finance that, now the government is again borrowing, right? So this borrowing could crowd out private investment and keep bond yields elevated, impacting government financing costs, right? So this is also another huge problem, that it can even widen the fiscal deficit condition, and it can even pretty much create a crowding out effect, especially for the private investments, right? And this in a way on the long run will definitely be a huge problem. Next is the greenwashing risks, right? So whatever be the investment that or let's say the funds that the government shall generate by issuing the green bonds, there is no hard and fast rule, or there is no proper mechanism which can track the funds, and also that ensuring that these proceeds which the government receives from green bonds are being transparently deployed in genuinely sustainable projects remains a huge challenge in India, because still now the tracking systems are not there, right? There is no proper infrastructure to track if all the proceeds or all the funds that the government generate by the issuance of green bonds are being properly implemented or properly channelized to those projects, right? So that is also a huge problem at the present time. So a lot of integration is also required. Now going forward, what is the thing to do? What is the way forward? First and foremost thing is to strengthen climate finance framework, because considering all the problems that the government has, especially concerning to or related to the fiscal deficit, equally important is the climate finance framework that it should try to strengthen, because clearly defining these projects, right, pipeline, the projects, clearly defining the projects which are supposed to be a part of the green bonds are very important. First and foremost thing, as in the funds that the government raise by issuing the green bonds, there should be a clear charter stating that this many fund should go to the solar plants, or let's say the infrastructure development of the solar plants, or probably so and so amount of rupees shall go for the wind energy, right? And so shall go for overall, to ensure that the funds that are being raised by issuing the green bonds goes for the sustainable development of the renewable energies that we are talking about, right? So that is one important thing. And also a transparent reporting and a third party audit to boost investors' confidence, to make sure that whatever the person is investing, right, the investors are investing in these bonds are being rightfully used for the required areas. Next is the fiscal prudence. Balance borrowing needs with expenditure rationalization to prevent excessive debt accumulation, because as we discussed, in order to finance the deficit the government has, it is again borrowing, right? It is borrowing to finance the debt it already has, right? So hence this borrowing has to be made sure that the expenditure out of the borrowing that the government is doing through the raising of the various bonds that it is planning to do, it has to be rationalized. Means the expenditure from the borrowing that the government is right now doing has to be sustainable, and it has to focus on those potential projects which could actually give positive returns for the government, so that the fiscal deficit condition does not widen or does not expand. So fiscal prudence is important to be ensured. Next is deepening the bond market. So it is very important to encourage wider participation by easing norms, right? all the regulatory framework so that it can have more investors from various backgrounds, even retail investors, all of those things, and promoting various digital platforms to make it more easy to subscribe to a particular bill, or sorry, a particular government security, and integrating bonds into small savings channels. Like for example, the government securities can be linked to the post office savings account, so that now small retailers can also or let's say they'll be aware of the government securities which are recently being rolled out, and also they can also start investing, right? So that is also very important to bring in more investors, right, to widen the investors base. And also widening the investors base, another important advantage to the government is that it can reduce the borrowing cost of the government, right? That is also one of the important point, that by increasing or by encouraging wide participation, not just by easing norms, or let's say if this happens, it is in a way going to help the government, because the borrowing cost of the government absolutely reduces. Means whenever the government is issuing the government securities, obviously the people wants to buy it, especially the investors. Now let's say there are only very few investors. Now in order to make this government security very attractive to that investor, obviously the government should plan for a huge return, right? In place of let's say 6% returns, right? Let's say the government wants to raise for example 100 crore through the issuance of government securities, right? But in order to subscribe to this government security, there are only 10 banks. And now there are only limited investors. So now the government, in order to make this government security very interesting or very high return oriented, has to obviously increase the returns that it pledges to this particular bond. So in place of 6% which it plans to give, now the government should think about giving it at 8% or even maybe 10%. Now considering that the return is very high, maybe the 10 banks, the very limited subscribers, can agree, right? Now on the other hand, in place of 10 banks, let's say there are another 30 more private organizations ready to buy it, or let's say another few more corporates are coming forward to subscribe. Altogether, now the entire base is increased. So now once the base or the number of subscribers gets increased for this government security, obviously the demand for the government security goes high, right? And now the government need not actually raise its returns for 10%. Now it can even charge 6%, right? And still the people would buy, because there is a huge demand, right? So now the borrowing cost, in place of 10% which it should have otherwise given to 10 banks, now the government can only give 6%, right? Because the demand is more. And now this eventually means that the government is right now only spending 6% in order to finance this loan that the government has raised, right? So hence, that is what we were trying to discuss, that ultimately by increasing or widening the participation of the investors, it would ultimately reduce the borrowing cost of the government. And last but not the least, the global collaboration. India has to leverage its international platforms like the recently the G20 and various other multilateral development banks to co-finance green projects, reducing reliance on domestic borrowing alone, so that the domestic borrowing that the country involves or relies on will be eventually reduced, so that we can, or the country can move towards or look forward to address